Canada's retail sales, a temporary reprieve or a glimmer of hope? The latest retail sales data for August 2025 reveals a surprising twist in Canada's economic narrative. While the retail sector experienced a modest recovery, economists remain cautious about the Bank of Canada's, BoC, future moves. Here's the scoop. Retail sales in Canada rose by 1% in August, reaching $70.4 billion, meeting analysts' predictions and Statistics Canada's initial estimate. This growth was primarily driven by motor vehicle and parts dealers, up 1.8%, and clothing and accessories, up 3.2%, providing a much-needed boost after July's decline. But here's where it gets interesting. Core retail sales, excluding autos and gas, increased by 1.1%, with general merchandise and clothing retailers leading the charge. This indicates that consumers are still spending, despite economic uncertainties. Retail sales volumes also increased by 1%, suggesting that real GDP growth might align with the flat output predicted by StatCan for August. However, provincial sales trends were mixed, with Ontario and Quebec leading the gains, while other provinces showed varying results. And this is the part most people miss. Despite the positive August figures, economists warn that the overall economic situation is fragile. Andrew Grantham from CIBC Capital Markets highlights that the sales increase merely offset the previous month's decline, and the volatile nature of certain sectors adds complexity. Controversy alert. The Bank of Montreal's Shelley Kaushik believes that the underlying weakness in Canadian retail spending persists, citing ongoing trade uncertainty. This view suggests that the BoC might continue its dovish stance, potentially leading to another interest rate cut. But wait, there's more. Grantham argues that weak consumer confidence, influenced by U.S. tariff uncertainties and a softer job market, justifies a rate cut by the BoC in the upcoming week. This perspective adds fuel to the fire, as it directly impacts mortgage rates and the housing market. Research from Capital Economics paints a similar picture, indicating a slowdown in consumption growth. Bradley Saunders emphasizes that the August rebound might not be enough to offset the expected sales decline in September, leading to a sharp slowdown in the third quarter. BoC Governor Tiff Macklem's recent comments about soft economic growth in the latter half of 2025 further support this narrative. As a result, money markets are anticipating a high probability of a rate cut at the BoC's next meeting. Stay tuned for more economic insights and don't forget to sign up for our free daily newsletter to get the latest updates on Canada's mortgage and housing markets. It's a must-read for anyone navigating the complex world of mortgages and real estate.